Hello, hello, hello. What's going on out there, crypto world? This is No Noise Research, your host, Z-Rex, coming at you live on October 1st, 2018. October's here, Halloween's around the corner. Hope you'll have some good plans for that. If you got a family, getting the kids' costumes ready. Halloween is a very fun time. Oh, last Halloween seemed really dead around here in Texas for some reason. It was like the most dead Halloween I've ever seen. Usually it's a really busy day for us at the business, and it was like one of the slowest, one of the more slow days of the year, which is usually one of the busiest ones. Kind of weird. So hopefully that gets a little revamped. I do remember everybody was all scared about that clown thing or whatever. There's like the clown meme kind of deal. There's always like a picture of a creepy clown like far away in the distance or in a tunnel or whatever. So maybe that clown just got everybody freaking out, man. Well, enough about some Halloween. Let's actually talk about October in general and Bitcoin prices. So, if you check out a Twitter post that I made recently, and I'm just going to actually open up the chart that I made, and we're going to look at it here momentarily. And while I do that, this chart, I just did a long-term analysis of Bitcoin, pretty much since it had good data, trading data, so about, you know, mid-2011 or so. And I noticed a couple things that I thought were very interesting. And so we're going to go ahead and talk about those right now. We're going to skip straight to that. I'm going to put on my shared screen. Alright, here you go. So if you see this chart right here now on the screen, you can see over here in the bottom part, I called it October Surprises. This is actually relevant too, because that is a kind of reference for election stuff, which is coming up also in about a month. So that should bring some nice volatility into the traditional equities, but getting ahead of myself, we can talk about that later. So I got all these boxes marked on here. The red ones are sell-offs greater than 30%. Green boxes are quarter four performance. So from today until the 1st of January is how I measured those. The pink box is the only negative fourth quarter since, and this is this guy right here. Let's bring that to the front so you can see it. There we go. It's the only negative fourth quarter since 2011. And I believe it might be the only negative fourth quarter. I mean, you know, 09 kind of doesn't really count, and even 10, I mean, you're talking sub-penny, most of it. So, and the purple and red trend lines here, they represent the mean. If you look at the market psychology graph, there's a mean line in there. And that's kind of what that's representing right here. So, that's not really the importance of this chart. Currently, I want to bring up mostly the October surprise part. And I did the ranges because I noticed that a lot of times in October there's a big sell-off in the beginning of the month, even if it's in a bear market or a bullish market. So I thought that was kind of interesting. Of course, back over here in 14, you know, it just rocketed. There really wasn't a big downturn per se. Let's zoom in a little bit and double check on that because I do see a little bit of a tail. Bam. Okay, so so this is interesting. So that was the 13, and that was right before the previous known high, you know, about 1200 before Mt. Gox happened. But if you look at this right here, we're on a 3-day. The first 3 days of October, even in this big bull run, and we were still very much bullish since before that too, if you look back over here. Right, so you can see even when this popped, Bitcoin sold off about 27% before it made this huge run in the beginning of 2013, and it actually made it did the same thing on the second leg up. In the first 3 days of October, it sold off about 30% in 3 days, guys. That's a big ass dump. If we get something like that, and if you go back to 2011, we actually had a 65% dump roughly, and most of that was in October, although it did bleed into about mid-November. But what was interesting is that the measurement from the beginning of the year, from the fourth quarter, it was up almost about 0.5%. So kind of wild ride there. But as you've noticed, there's lots of volatility in October, and even in bull markets. Let's go to the bigger bull market. Here we go. Here's 2014 October alone. Had about a 35% drawdown. Let's go to October 15. It did not. That was the one time that we just started rocketing out the gate. But, you know, that was after also a year of consolidation, pretty much, and some violent moves, flattening out, accumulation, and then resuming the rally. So, only in the last couple of Octobers have they been bullish. 18, 19%, and 16, and most recently, last year, it was about 56%. So now that I've kind of run through those, in the beginning part, you did see, even with continued runs, you did see this little marker here. Let me go ahead and put a little arrow on that. So even right there, you had a 30% drawdown before it ended up running 500%. Okay. This is something I've been, if you've been listening to these, this is something I've been wanting to happen for most of this year, so we can just get the capitulation out of the way and we don't have to think about it, and we can just worry about sideways and some scoopy action. But we haven't gotten there yet. We're still working on it. We are close, and today is OC1, October 1st. And considering most of these sell-offs actually happened in early October, I'd like to lean a little bit that way. I'm not quite going that way yet, but I want to lean that way, a little bit of bearish after doing this analysis. So let's just carry that straight over to the main chart right over here. And I know we're going a little bit out of order. We usually check out the market cap, but I thought that was really important to show the October performances, because it's shadowed, the weakness is shadowed, I believe, in October, even though quarter 4 is generally bullish, which includes October. It's October, November, December. And it's almost like October's the dump capitulation month to get ready. And the only times that it wasn't that, of course, was last year and the year before that in 2016, when we were fully in the bull market. So I do think that's very noteworthy, and especially with all this consolidation and price action that we've been discussing for, it seems like, a millennia. I know, I get it, it's so boring. Y'all know it. Here's the green box, the green twilight box. We're just like in this shit. We can't get out of it. Oscillator still super neutral. Neutral on the daily, neutral on the 3-day, neutral on the 4-hour, neutral on the 1-hour. Neutral on the 850, and guys, it's even freaking neutral on the weekly. It's actually been very sideways and neutral this whole year on the weekly, which, if you look back, and the only time it was kind of like that, I highlighted over here, it's roughly similar, but not, this is even more compressed. This is actually the most compressed action back to 2013 that we've seen on BTC. So that is very interesting. If we go to Bitstamp, we should be able to see a little bit more data, so let's go ahead and do that real quick. Right there. Yeah, see, we got the same kind of squeeze. Oh man, I don't have my lines. Let me add those real quick. Get a little reference points. All right, 16 and roughly about mid-20s. All right, so this consolidation, you can see here. You can see a little bit of it right here, and a little bit of it right here, and that's it. You got bam, bam, and bam, and you could we'll throw this one in there. All of those consolidations were preceded, and I know this is kind of a busy chart here. Actually, here we go. All of these squeezes preceded into up moves, except for the one in 2014, which happened right here last summer. It had another, 80 or 70% downfall from there. But this one here in August 15 squeezed and led to higher prices. I guess if we want to throw in this little baby squeeze right here, also higher prices. And now we have the longest term tight squeeze for going on for almost the entirety of 2018. And it's really very interesting to me. I'm not... It's like I want to get really bullish, but this market's doing a damn good job of keeping people on their toes and confusing the shit out of everyone. So, as I discussed yesterday and the day before, as we're still sandwiched in between the 21 and 55 exponential here, I am... Let me lower this green tint just ever so slightly. Just a little bit. Alright. And, yeah, so we're just consolidating still between here. I'm waiting for price to break to jump on this momentum because it's going to be very large. The oscillators are way too compressed. Lots of coins are falling into this category too. It's not just Bitcoin, but considering this is Mama Bear and it matters most currently, that could change in the future. I'm not against something like the flippening. I do love Bitcoin, but that's for another day. That topic is. But as we keep going sideways here, you can see we do have a triangle that has slightly formed with a trend line cross right here at like the 67-ish area, which coincides with the 55 daily moving average. We've got massive resistance there, but then again you flip it over and we've got great support right here at like 65. So we're like literally in this little $100, $200 tight ass range, and we only have another couple weeks before the apex of this triangle is met. And also, if you wanted to put on this longer term one and call this a descending triangle, which you definitely could, the apex to that is pretty much the rest of October, and that's it. So we should see big moves. It's funny that the technicals and the chart patterns and everything have lined up to this compression into October, and that's why I went and looked back at the other Octobers, and they all had really large moves in them. As y'all saw on that chart that I had up earlier here, if you want quick references, I mean, you're talking the ranges were 65, 27, 143, 35, 43, 19, and 56% going back to 2011. Those are all gigantic moves. Okay, and that's just the ranges, the percent ranges in October alone. So it's about to happen now. Y'all can get ready. We don't have to sit here anymore and twiddle our thumbs and do all that kind of crap. And Q4 too, after October surprises, Q4 performance has been pretty much positive. I rounded this up to 1. It really is only about 0.5%, but I just round everything up to the next whole number. But yeah, you can see every year except for 2014, which, you know, most people don't actually remember that because they got into crypto last year. I know a lot of y'all do remember that, and if you were there and you're still here, congratulations. I'm glad to see you, that you weathered the storm. But yeah, this is a very interesting here. October is full of surprises, and that's just so appropriate for the elections coming up. Do a little Google search if you don't know what I'm talking about on what October surprise means. Anyway, we are still so damn squished up here. Let's see what we're looking like on the oscillators on the lower time frame, since we're so damn neutral on most everything on the higher end. The 4 hour, I guess you could give it to the bears ever so slightly, because they did peep over it just for a second like they did back here. And this does look to be like a half back max. Yeah, so it's stalling at about half back, and also the 618. To top it off, this is so funny. To top it off, the 618 is right here at about 6,666 or so. And then if you go back to what we were talking about on the daily, that trend line cross and all these moving averages are literally right there at 66666. It's the devil's number. All right, so that's pretty funny. We're just waiting for price to break. And we are under the longer term moving average right now, the 377. That's this red one right here. So I guess overall you might have to lean just slightly bearish, like a like not even a whole percent, like 50.5% to 49.5% or something like that, right? These are still looking good though. On the hourly, we are still holding that support level again, 65.50, 66.50. That is like our freaking range right now. At any second too, guys, this is just gonna pop like this or drop like this, or maybe we'll get this and we'll just stay in the range and it'll be it'll be really exciting. Oh god, I hope not. But given that October is full of nice surprises and lots of down draws, even though it does close up about 60% of the time, it does not start off very pretty. So I'm watching that extremely closely. Just like I said yesterday and the day before, I'm not long or short right now. I'm just waiting for price action to give me some, some light. Because right now, this is just too dangerous. What are you going to get short right here? And then what? I mean, the risk to reward is not great either way at this point. And it was good. Y'all are like, well, dude, you were talking about buying the dips all the time when it got to low sixes or like back in here in this lower part of the box. Yes, that is true. And let me brighten this box up because I forget when I watch this on the stream sometimes you cannot see some of the stuff I'm looking at. I just don't want it to be too bright. Maybe I'll do a little bit less green. How about that? Whoa. Oh, that's ugly. No, I don't want to do that. Let's not do that green. Alright. Alright, so, what are you going to... This isn't, like, the best range to even short here, even from this range box. You want to shorten, like, the bottom third of it, not the top third. So that's the first thing. And you could say get long, but, you're coming up on this resistance on this trend line that literally has been rejected. Price has been rejected from it for like, 7 times or 6 times or, depending on how exactly you want to draw it, it's at least 1, 2, 3, 4, 5. I'd count this as like, as a 6 at least, and possibly even this one. So whatever, we'll call it, let's just say 6. And this is going to be the 7th time that we're testing it. So what do you want to take a long right here? You don't have any... There's just nothing that is lining up too good. The only thing that's lining up and price is telling us is we're about to get some massive movement here. So I'm just waiting for that price to break out, and I thought it was going to be to the downside watching this earlier today. The DMI bears getting into the power zone, but they kind of faked everybody out and immediately lost their momentum and went back neutral after all this got bid up. And that is a crazy looking little hammer. Did have some decent volume on there, so buyers went ahead and said no this time. Again, off of this measurement, we are around a 618, kind of in that bottom zone here. If you just took closes, it's still not that much farther off. It's still right around that 6600 level. All right, a little bit over, about 6620. So again, gotta wait for price to tell you what to do. Just be patient. Some of the best trades are to not trade at all and wait. I know that's really hard. One thing that does look a little bit bullish that we talked about last week was all of this divergence coinciding with this hammer candle and the capitulation volume, arguably the highest consecutive volume that we've seen in Ethereum in its traded history, which stands out a lot to me. This is the only thing that keeps me a little bit thinking that this is going to be to the bullish side, is Ethereum. It told us that it was selling off way back over here in the beginning of August. It was weak that entire time, and now it finally got capitulation. We discussed that in other videos. If you do want to watch those, I timestamp all of them so you can navigate quickly and just go look for the ETH or Ethereum TA link and click on that one, and I'll discuss this. But in short, you have the hammer here, but you have kind of baby volume, a little bit. It's picking up, but baby volume. And then an inverted hammer, and then this is like a weird setup, right? But you have no divergences anywhere. And it was kind of close. We talked about just this being range bound here, which played out well, and then it broke hardcore out of it and sold off. Then the next time we made another hammer on high volume, way higher volume. If I bring a horizontal across this, if you can see that, that's this little cluster. So you can see that's like pretty much in the top volumes that it gets to in its traded existence. And you get high volume there, followed by an engulfing candle with divergence and on the bottom of a trend channel. You know, was really good to play for this bounce, which we were discussing. And now we are holding on the dots here, which is the triple exponential. They're really good for identifying supports and resistances. You can see here the dots start going above price, and then they fake it out right here below, and then it smashes through. Kept going down, broke above it here, made some support, and it's been riding this support and now is flirting with the 21 daily exponential, and it looks like it's also around the 618. Yep, there you go, 618. So where all this is happening. So bulls really need to just punch through right now, but given that October is kind of bearish in the beginning of the month, I would love to see a good fake out kind of sell off from here. And something I could show y'all that I drew earlier with a buddy of mine. We were talking about just market stuff, you know, and we drew this falling wedge, and this would be a really awesome scenario. And I'm not actually saying that this is going to go up to this. I just kind of drew it really fast. A measured move from this breakout point from the wedge this is how you would measure it. You take this distance, and then wherever it broke out, you know, on this wedge, you would apply this to it. But pretty much wherever you put this, you can see, look how funny that is. It lines up with 12,000, and if it goes all the way over here to about 11.5, that's right where there's massive resistance. And y'all know, if y'all been listening to these, I'm bearish on, generally bearish on crypto until we can stay above that 11-12K range for at least a month or so. Long term, I'm super bullish crypto, but right now, to get really excited again and have all these insano run-ups or everything starts popping, Bitcoin is going to need to be above that 12K range to get that momentum back. But if you can see on here, we've ping-ponging in this falling wedge. This is a very textbook falling wedge, in my opinion. And this is setting up right now for a really good sell-off, and this could possibly spring right here. The spring is the last part of this formation, and it's usually the bear trap. And it gets everybody all, you know, super scared, and they're like, oh shit, it's over, man. It's totally over, man. And let me extend this out a little bit, because it's likely to go that far. Yeah, so something like that. And even if you drew this line all the way out until they met and intersect, which wedges usually don't do that, that would turn more into a descending triangle formation. This actually would need to break out a little bit sooner than the apex here, but that apex puts you all the way into the summer of next year. So that's kind of interesting. But I do think this is what I would really like to see, this huge sell-off and then a nice little pump out of it, which would complete this pattern perfectly. Not saying it's going to happen, just providing some food for thought. It could easily just keep chopping this way and then break out from this area easily. Could definitely do that, kind of a little choppy right here. Kind of do this and then test it, come back, test it, and do something like that. Since Q4 is pretty bullish, except for 2014, I guess we're really going to know if we were in a for real bear market or if we were just in a gigantic liquidation break before continuing the bull market. Because if you can draw a trend line, like I showed you on that other chart, all the way from pretty much the beginning price to now, and it hasn't broke it since Bitcoin's been out, so that's also very interesting. All right, let's get back to the other price chart here. So Ethereum is neutral on the hour. It is neutral on the 4 hour. I know, shocker, right? Probably getting tired of hearing me say it. Well, sometimes, you know, I don't want to say I'm getting tired of saying it, but it is definitely redundant. Neutral on the daily. Neutral. Oh no, bearish on the 3-day. Okay, so that's something that's interesting. You have Ethereum is bearish still on the 3-day with printing support way down here at like 175. So that's not the best And it's bearish still on the weekly too. So that is interesting. Is Unicorn Shirt Man warning us that this is not quite the end? Again, y'all, look out for this October surprise, because it cometh. Let's go to Litecoin. A little position we put on yesterday is getting a little tested, not quite out of it, almost getting caught. So that's interesting. So there is going to be lots of support here, you know, which makes sense. It's the 55, and right behind it is this rising trend line along with the 144. So you are having this getting tested slightly, but this was only, excuse me, this is only about a 3% downside risk that you were taking in targeting the upper end of this channel here. So still in there, just barely hanging on. We are still holding above the middle part of the longer term channel. This is like a little mini channel inside of the big picture one. Let me zoom out and show you. There you go. Been intact since the highs, only with one little slight breach here. And this did breach it, technically price-wise, right here. But it was a wick and came right back into close right on it. So that was pretty interesting. And now here we are, kind of getting rejected a little bit off of this midterm trend line. So definitely something to keep an eye on. It's neutral on the daily based off oscillators. How about 3-day? Neutral on the 3-day. Very neutral on the weekly even. So, all right, so guys, look at this. Litecoin is actually looking very similar to Bitcoin as far as the oscillators, specifically the DMI. You know, and the last time that happened was price did nothing and literally went sideways at $3 for 3-4 months, and then finally broke out. And then you have a little bit of the consolidation here, but it wasn't in the neutral zone like it was here and here, so I'm not going to count that. That was clearly bearish the whole time until this pop right here. So now that, you know, we can compare that a little bit to the past, this is looking just like BTC, which isn't surprising, as this is what the silver to Bitcoin's gold, and whatever kind of analogies you want to put with that. Let's go back to the hourly. Neutral on the hourly, so it's still very damn neutral. The only one that's like slightly bearish, you could give the 3-day, which is interesting because the 3-day on Ethereum is also bearish. So on Bitcoin it is not, it is neutral. Let's see, how about Rips? Good old Ripple. Where is it? There we go. Ripple's still looking okay. Still holding above. It's a purple exponential, the 144. Still looks bullish on the 3-day. Still looks bullish on the daily. And we're, as long, like we've talked about, as long as we hold like 50 cents, this is still a good trade. This is bullish. All of the moving averages are starting to point up here. So this is looking pretty good. Although the only thing is we did get a little spinny top here off of meeting with this resistance, kind of the double spinny top we had here. We did just kind of put that same, where did that just come from? What the hell is that? Oh, it's on a lower time frame. Okay, so here we go. I'm glad I pulled this up. Kind of snuck up. It was hidden in the hourly. So this trade got busted out. Took about 5%, maybe a little more depending where you got out, maybe like a 7% loss. If you held it, but if you didn't and you missed it, which is easy to do, maybe you're at work, you're not watching your computer all the time, and you came back and you're like, oh shit, it's right back in my range. Technically for me though, that would have been broken and I would just take this off because it already broke your downside. So even if it got back in here, don't get FOMO'd back in and let your confirmation bias be like, oh yeah dude, see, it's right back about where I was in. No, it broke out of it, you just maybe didn't see it, take it off, it's done. Done, boom, delete it. Keep that chart clean. Wait for the next opportunity, as they are infinite. Don't forget that. Your capital is not. So this is starting to get a little roundy, little mini rounding. I don't like that too much. Although the 4 hour is still slightly bullish, and the 1 hour is neutral. So we're not getting too much. The line in the sand on the hourly, along with the bears getting into the power zone, is going to be priced getting back below this 144. If we do that, we're definitely going to come flash to mid 40s, I think, very quickly. All right, let's go to EOS. Dollar. Still okay with the trade setup we have. I'm going to go extend this a little bit. Still doing all right, kind of just playing in profits. You know, if you're feeling a little, I don't know if giddy's the right word, but if you don't like kind of the stuff with October surprises, and given that that's a really volatile month for Bitcoin, it's probably not a bad idea just to take these off right now and just wait so you don't get caught with your pants down. It's never a good situation to be in, or is it? Well, I guess it depends what you're talking about, right? So on the hourly, is still neutral on EOS. Bears have a slight advantage on the 4-hour, not very much though. On the daily, very neutral. I know, gosh, shocker. We have hardcore resistance. I'm gonna go ahead and throw me an alert right there. We have hardcore resistance at 625. All right, so or mid 20s, call it 625, 630. Lots of resistance there, and ultimately that resistance will be double whammied at the 675 level. But you know, we are breaking out of this channel very quietly, so this is one of the better looking long positions at the moment, technically speaking. All right, let's go to ETC because we haven't looked at that in a while. The good old Ethereum Classic. Not really doing shit, very uneventful. We've been in about $1 range, almost less than $1 range for a whole month here. Nothing too exciting about that, nothing to really say. I've been playing this long with the stop around 10 bucks, and I'm still holding this one, just feeling it out, see what happens. Nothing too exciting yet, but no worries. All right, let's see. Let's go to the 3-day on that one just to double check. Bearish on the 3-day. Mostly neutral on the daily. Just got back neutral on the 4-hour, neutral on the 1-hour. I know, guys, it's neutral. I'm sorry, I can't change it. I'm just reading the chart, man. It is what it is. You know, people want to try to build charts too to like fit their bias, and like, don't do that. I've done that a lot. It makes you lose a lot of money too, by the way. So very neutral on ETC, as we've been talking about in these ranges. Oscillators suck when the price doesn't move that much. The hourly maybe could be your friend at best. I mean, I don't trade below the hourly. That's I've tried it, I've done it, it's okay, but it's just too much like a drug, or like it's like crack or something. I've never done crack, but I'm just saying, it just seems like that. You're like, oh, I'm watching the 5-minute, every 5-minute bar. Oh shit, man, it's gonna close. It's just kind of a little too much for me. Doesn't fit my personality, I guess. I can be patient and wait. And so this is more squeezing action. Let's go to Monero. Looking nice, just bouncing right up on this trend line. You know what, guys? Let's zoom in a little bit on the 1 hourly. The 1 hour on Monero is actually looking slightly bullish. 4 hours neutral. Daily is neutral. 3-day is neutral. Guess what? The weekly is neutral. I know, shocker, right? The 1 hour is really battling. The bears and the bulls are hanging right around the cusp of the power zone, which is that mid-20s level. This is interesting. It's kind of banging up this trend line very nicely all the way back into mid-August. And you're like, dude, it breached it here and here. Okay, whatever. You want me to draw it like this instead? It's the same thing. This is art, y'all, okay? So I like to touch as many points as I can, and mostly like with bodies. I like the bodies, not as much as the wicks. So given that, we are coming up on a decent risk to reward setup for a long. Right here, you could probably just stop out at these lows, just a little bit underneath the trend line. And let's say if you drew the trend line like this, touching this bottom and these bottoms over here, right there, and here, and this wick, and you just like to do the wicks, you know, that puts it about where I was looking at. So let's extend that just ever so slightly, You can do about a 3.5–4% risk. That's about $4 right now to 110 area, maybe upper 100, like 105, like single 100. Let's see here. Let me get that right where it needs to be. And I think a target on this could be, let's zoom out a little bit. Looks like a lot of resistance here in this area, so we can kind of just target right in. I'm gonna go halfway. I'm gonna target right in between this business here, up here, and this business and this business, this little block. So I'm gonna go right in between that, and I will be aggressive in this, just given that we are in October surprises. All right. So if you get any of this and are right, you want to take that money and run like a thief in the night. So Monero is looking all right, just slightly bullish, but not very, like barely, like less than what I said earlier. What did I say? 50.5. This is like 10 basis points in the favor of bulls. Let's go to Dash. Good old Dash. Dash is still in a decent position. You had an opportunity to manage it at 50%, which I talk about a lot. Take off some of that and let the rest ride. That way you're always capturing gains, and in the long term, that is essential. If you don't do that, you won't make it in trading. Kind of like period. That is you've got to manage those winners, and I will say it probably every stream. Everyone always talks about, you need stop losses, man. Watch out for the losers. You know, you gotta watch out for those. Really, how come no one talks about, we better make sure you peel your winners off and take profits? No, no one says that. They just say, you manage your losses and you let your winners run. That's like the cliche meme of the trading world, and it's so bass-ackwards. That is not. If anything, you can probably let your losers kind of ride out and just keep managing your winners, and you probably have a better chance of coming out ahead than the other way around. That's just from my experience. But anyway, this trade setup is still kind of standing. Everybody's really weak on the hourly on Dash. We're actually both in the weak zone, and it's been consolidating down there a little bit for the last few days. Let's look at it on the 4-hour. Same thing on the 4-hour, consolidating here closer to the weak zone. So whoever comes in is going to come in fierce with this shit. Even on the daily, both of them are in the weak zone. That's almost more rare than both of them being up by the power zone. Wow, that is pretty interesting. And very weak, neutral on the 3-day. Even on the weekly. Okay, and so, but this is interesting on the weekly. We're barely breaking out of this, just like EOS is off its trend line from the beginning of the year. It's quietly breaking out of this, all right? And so you do have clear support being printed by this triple exponential, and if you want to get like a real good fib support, you're at about 165 to 169. So do be careful on this one. Be October surprises. This is still fitting the bill though fairly well. Once we close though below that 170-ish area, jump that ship. I'm not telling you what to do. That's what I'm doing. I'm just talking out loud, man. That's it. You need to learn how to trade and do your own shit. Don't listen to people. Don't be like, oh, I need alerts, man, and I need this and that. And tell me what to buy. Tell me when to sell it. Like, if you are like that, please learn how to do risk management, or you will never, ever be a good trader. You will quit and lose money, and then you'll never do it again. And that's not the point of trading. You want to like be able to do this, not to get rich really fast, but just to preserve capital and fight inflation over time. You know, inflation is, I know they give a benchmark number of like 2%, but that's a bullshit number. I'm sure y'all have shopped, especially here in the States. I'm sure y'all go shopping, and you know that prices of stuff are going up, or they call it shrinkflation. The packaging sizes are going down while the price stays the same. So it's effectively the same damn thing, right? And if you just use the calculation that they used to use, the government, the US government used to use for inflation in the 80s, in the early 80s, if you just use their old formula, which they have changed over 20 times since then, by the way, if you use that first one in the early 80s, we're banging out about 10% inflation a year right now. which seems a lot more realistic. So you need to make about 10% a year just to kind of not lose purchasing power, and you can easily do that. Everybody just wants to hit it out of the park and make $1 million like next week. You know, that's just not gonna happen. Sorry to bust your bubble, but it ain't gonna do it. Ain't gonna happen. All right, let's go over to equities, and then we'll wrap this up. Still kind of playing out the same way. We've been just playing, getting long on the bounces off of this trend line. Nothing really different about these. We did get a little bit of sell pressure today. If we go look on the hourly, you know, we had a nice little pop early this morning, and then it got rejected pretty much the entire day. The bears do have control on the hourly. They don't have it on the 4-hour yet, and if you look on the 4-hour, we're consolidating right on the 55 and 21 exponential. And if you go to the daily, that goes all. We can still drop about 20 points from here and still be very bullish. I am not changing my stance, and I can't even get slightly bearish on equities in general until the S&P breaks 2875 on a daily, like, period. There's just silly. Everybody's like, oh, dude, it's all-time highs. You can't go here now. It's gonna crash. Well, maybe. How long have people been saying that, though? Let's look back. Oh, look, here's 2016. Oh, man, look at that. Highs, new highs, new highs, new highs, new highs, new highs. Oh, little crash. Then a new high, oh, then a little crash, new highs, new highs. So it's like, well, how many times are you going to cry wolf, right? It's like, come on. The charts are not telling us that it's bearish, especially on the higher time frames. On the weeklies, on all the indices, looks incredibly bullish. You are printing a little bit of divergence from here, from this cluster into this pump. So that is the only kind of concern, and that's mostly on the oh, no, okay, that's on all of them. But this could easily catch up, right? Like, you don't know, since this just barely came back in after consolidating this move, this could still make a new high. It's too early to say if this is divergence. We still need a couple of weeks. Do be wary that elections are November 6th. So that comes up in about a month, and we are likely to get some volatility, especially if, and I don't care about politics, left or right, it doesn't matter to me. But if the Democrats can get a little bit of control, possibly, and they start running headlines that they're going to take control of the House or the Senate, I can imagine that causing a little bit of fear into the market. Just temporary, though. Nothing too crazy. Let's go to oil. This is funny, guys. You all know we've been bullish on oil for a hot minute. And literally, last night, we said, ew, this looks pretty damn bullish. We've been bullish since it broke 69 and stayed back in this channel after testing it 3-4 times. And ultimately, confirmation on this move was breaking above 71. We have done that. We haven't looked back since. Last night, we literally talked about, hey, and it was before this move happened, but we were like, oh, man, this pop, when futures open, we were kind of like, you know, a lot of time it goes sideways, and you got to wait for the regular session to fire off, and that's when the big move happens. And I was saying that the path of least resistance was to the upside, since we're so close to the middle part of this channel, and it was only a couple dollars away. Now, I did not think we would hit it in one day, but we did. One freaking day, right up to the middle of this trend channel. And y'all know that I've been having to manage this a little bit. I did take a slapping on my oil position today, but that's okay. It happens sometimes. Yeah, but that one beat me up a little bit. I'm gonna have to go more in a little later tonight and cry myself to sleep. No, I'm just kidding. I already know what the risk in those trades are, so it doesn't really bother me when I lose. I know you're going to lose at some point, and that's just part of the game, y'all. On the oscillators, if you look, we are in like the super power zone. I'm thinking of adding a different level on this, so then it's above 40-ish. I don't know yet. I'm playing with it. I've just noticed when you get business way up there, no matter kind of the underlying, it can still have continuation. Like here, you had continuation, right? Another dollar or so, but then it was followed by like massive sell-off. You know what I mean? It went from 71 all the way to 68.50. And it was when this got into that upper zone above that 40 level. Same thing here. Same thing here. Same thing here. Little sell-off here. Same thing here, little tiny one. But, so that's something interesting. I'm not sure what that means yet, but this is still looking pretty damn strong. I don't see a reason to get super aggressively short here yet. Although I do think that this move is a little bit overcooked. Everybody's talking about $100 oil now. And war stuff, and it's interesting, the sentiment in the market. So a lot of people are calling for lots of higher oil prices. Could go that way. Right now, we should at least minimum get a little bit of consolidation coming up on this middle part of the trend channel. So, you know, you can clearly see that it has played around with it quite a bunch on the upper and lower side of it. So, if you were long on this, taking profits right here is probably not a bad idea. I know that's what I would be doing. Let's go to gold. Good old gold, still looking kind of weak. The bears lost the momentum, though, today. They're going back into the neutral zone. On the daily, though, still slightly bearish, and I only say that because the bulls are way down here in the weak zone. They're not even battling together in the neutral zone. And even on the RSI, you have the, we're just kind of teeter-tottering right there around the 50. So there isn't any strength yet in gold. I don't see it. Y'all know I've been bearish on gold for a hot minute. I am looking for lower prices, and mostly just because the dollar strength. And the dollar tends to rally in the last innings of the equity bull runs. And the Fed, I can't recall of any sell-off in recent history, and I'm talking, you know, maybe like 100 or so years, that was not preceded by a rate hike or a series of rate hikes by the Fed. Almost all of them have been triggered by that, which is interesting in itself. Let's go to GDX, because I know everybody likes inverted head and shoulders, and you know that I don't really like them. I think they're kind of silly most of the time, just mostly because people will be like price is right here and this is happening. They're like, oh, dude, look, it's a head and shoulders, bro. See, told you. You know, they just like draw them way too prematurely. One thing that I am seeing here, though, let me go ahead and put one, is I kind of am seeing one build up. If I can find the damn thing, here it is. And it's not the prettiest one, but sometimes those are better patterns. Here you go. Something like that. Let me fill this out. There it is. We are seeing a slight head and shoulders here on GDX, which is the junior miners. It usually leads gold price. So it's the only thing where I'm like, ooh, maybe gold's got a little run in it here coming up. Possibly. A breakdown of, actually, I'm going to go ahead and put a alert, or in alert, crossing down 18-ish on GDX is going to break this pattern. And, geez, I'm sorry. I need to get some water here. And it's going to break this pattern and negate it, or we're going to see it show us some nice strength. And a measured move on this guy. Oh, look, that's the new head and shoulders pattern. No, I'm just kidding. So right here, let's just kind of do a little bootleg measuring. If we broke out, that's going to about 21 bucks. That is a big move in GDX. I do have some put spreads on GDX right now that I've been selling on some of these dips here. All right. So that's the only thing that maybe makes gold have a little slight pop in it, but we have to wait until this week. We will know if this pattern will break out. This week will tell us if we're getting some more downside action immediately, or if we're going to maybe have a little pop with some sideways. But if this breaks down like here in the next few days, done. We're going lower. All right. Let's go to the BTC and wrap this up with final thoughts. My final thoughts are we're range bound forever. That's it. Goodbye. No, I'm just kidding. Oh, look at this. We're about to have the 144 cross the 377. That would be extra bearish. We don't want that to happen. That's a... I know everybody's like thinks about death crosses. It's like the 5200. This would be not as pretty. Again, there's not really much else to say, as there hasn't been in the last few days. We're not going anywhere until we go somewhere. And you're like, oh, dude, thanks. That's like the best analysis ever. Well, sorry, it's true. Like, unless we got to break out of this damn tight-ass range. 66 to 69, depending how aggressive you want to be. And pretty much the floor right now is like 6,400 to 6,550, depending on how aggressive you want to be. That's the ranges. I'm sticking to it. You are seeing, as we discussed earlier in the video, there's only a couple that look kind of bullish. EOS and Dash look a little bit bullish, like they're breaking out of their channels, but it doesn't have any conviction yet. I mean, Ripple probably looks the best. What about Doge? We haven't looked at Doge in a while. Let's jump over there real quick. Look at Doge. Doge just floating around, doing its own thing, being a little Shiba. Both, again, look at this, guys. We're getting into the weak zone on both bull and bear measurements. That is very odd. That just tells me more that this energy is getting so pent up. Please be ready. And it's almost best right now to just be neutral and have no positions on and just wait until price breaks. Wait till Mama Bear tells us what the deal is. Alright, that's my story. I'm sticking to it. Again, my name's Z-Rex. This has been No Noise Research. If you found any value or liked any of this, please hit the sub, bell, and smash. Join any of the Telegrams. Check me out on the Twitters. All that fun stuff. Most everything is at No Noise Research, except for the Telegram chat is at No Noise Chat. All one word, no spaces or underscores or anything. And right now, we are just still perpetually range-bound. Like the last video we discussed. We are going to break it in October. I can say that with certainty, which I usually never do. It's a dangerous thing to do. But after some analysis that I shared earlier in the video, go check that out, please. We're getting the big move is happening this month. It's going down. Strap in. Get ready. Don't know which way it is. I kind of hope it's to the downside for capitulation for reals. Let's go test this line, freak everybody out, and then get everybody real freaked out. If we can kind of just go sideways and then roll into possibly this long-term trend line around 4 to 4,500. That would be beautiful. That would set us up for a nice face ripper rally. Can still have it from here just because price has consolidated so long, but that would give it extra awesome power. Just as the same thing to go down more, if we went up here and tested back to 75 or 85, that would give us a lot more power to go back down too. So we are in just a really funky, confusing Twilight Zone place here. Wait for that price to break out to tell you, and then jump on that train. That's what I'm waiting for. That's what I'm going to be doing. I will talk to you guys tomorrow. Much love. Happy trading. Peace.